Hi everyone, this is Raja from Fincharger and welcome to this video. So in this video, we're going to discuss how you can make a corpus of over 1 crore rupees just by saving tax. So in this case, I'm saying if you are not investing in any other instruments and only saving tax saving instruments, even after that, you can make 1 crore and retire with that. So let's see how we can do that. So let's say you don't make any other investments, but you only invest in PPF. Okay, and in PPF you can invest up to 1.5 lakh rupees every year and it gives you a fixed income. So let's say you invest 1.5 lakh rupees and the minimum lock-in period to invest in PPF is 15 years and the current interest rate is 7.1%. So if you keep investing 1.5 lakh rupees every financial year for 15 years, you will have over 40 lakh rupees. Okay, now this is the amount on which you are saving tax. You are not making any other investments. You are saving tax. If you are in 30% tax bracket, you are saving over 45,000 rupees of tax every year. So if you're investing just for saving tax, then in 15 years, you can make 40 lakh rupees. Now in PPF, you can extend your maturity period in 5-year timelines. Okay, so let's say you increase it to another 5 years to 20 years and then increase it to another 5 years to 25 years because you are saving tax every year. So it's good to invest in this, and this is a fixed income instrument, so your interest will never go low. So if you keep investing 1.5 lakh rupees every year for 25 years, then after 25 years when you will withdraw your money, you will get over 1 crore rupees from PPF without any risk and just by saving tax. So here you are getting triple benefits. First of all, you are saving tax on the money that you are investing, so you don't have to pay any tax on this amount to government. Then you are getting a fixed income, so there is no up and down like equity market. And finally, the amount that you get, this 1 crore rupees, this will be completely tax free. You don't have to give any tax on this maturity value as well. Okay, so you will get this 1 crore in hand without any tax cutting. So now let's move on to another thing. We also have something called NPS or National Pension System. This is another thing which you can use to save tax from the government. So let's say your current age is, let's say your current age is about 25. So if I give it like this, okay. So let's say your current age is 25 and you start investing from 25. Then if you invest till 60, in this NPS scheme. In NPS scheme, you can withdraw your money after the age of 60. And if you invest 5,000 rupees every month, and let's say we don't want to increase the contribution, we are going to invest 5,000 rupees only, because in NPS you get a 50,000 rupees additional tax saving other than PPF. So from PPF you are investing 1,50,000, and from NPS you are investing 50,000 rupees every year. So if you do that, and let's say the expectation of return is about 10% if you choose an aggressive fund, then what will happen is you will get a total corpus of over 1.9 crore, that is close to 2 crore rupees. Okay, so here you are investing 5,000 rupees every month or a little more than 50,000 rupees every year. You are saving complete tax on that. And then at maturity, you are getting close to 2 crore rupees, and that is also completely tax free. You can withdraw 50% of it and keep another 50% of it in the annuity fund and then get pension from it. So you can get 55,000 rupees pension. Let's say I make it lower. Let's say the annuity rate is 4%. Then you will get about 30,000 rupees pension from this. Okay. So just by saving 5,000 rupees every month, you can create a corpus of over 2 crore rupees, and from that you can get a lump sum of about 1 crore, and from another 1 crore you can get a pension of 30,000 rupees, and this will be completely tax free in the beginning and in the end as well. Now if you want to go a little further, then you can invest in ELSS mutual fund schemes. This ELSS fund is the only mutual fund which gives tax benefit, but in this case the returns or the maturity amount is not tax free, but the amount that you're investing, you can deduct that from your taxable income. Let's say you're investing 1.5 lakh rupees annually. That means 12,500 rupees every month. 12,500 rupees every month, and you are getting an return of 12% that's an average return, and you're investing for about 20 years, let's say 20 or 25 years, then you will be able to create a corpus of over 1 crore from this ELSS fund as well. Okay, but in this case the maturity amount will not be tax free, but in case of PPF and NPS, the maturity and the investment amount all will be tax free. So if you want to become a crorepati and don't want to invest in any other financial instruments, then you can become a crorepati just by investing in tax saving instruments. So if you do it with discipline every year, then you can retire with a handsome amount of money without taking any risk and saving tax throughout the year. So I hope you enjoyed this video and learned a lot of new things, and I hope you will start investing in these tax saving instruments from early in your career, and then you will be able to retire with a handsome amount at the age of 60 or early as well. So thank you so much for watching. This is Raja from Fincharger, and I'm going to see you with another video very soon. If you like this video, make sure to hit the like button and subscribe to Fincharger for more cool and educational videos like this.